Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, July 20th, 2022. It is exactly 12 p.m. Eastern Time as I'm starting the video, and just want to do an update on the equity markets. I will follow up a separate video, trade ideas, some of the trade ideas I've covered recently. We'll talk on the energy commodities, nat gas, crude oil, the individual stocks, everything else. But right now, it's the stock market that I'm focused on. I got a couple posts out to you today. So we've hit that again. Just want to be very clear with my words. What I was referring to is my initial swing target. You know, we had multiple targets. When I say initial, had multiple targets on the way up here, but was and has been. Let me go back to that daily chart where I thought back here made that pivot. There's a link to that post on there on the 16th. Covered all shorts, started going long, continue to add to longs, and I've had nothing but check marks. Today's, by the way, a big check mark. So this is, I speak with wearing both hats. I always say I wear multiple hats. I'm an active trader, a day trader, time swing trader, trend trader, investor. So let me be clear. What I've done here today is reverse to short in my active trading account. I have taken some profits on some of the longs in all the other accounts. Those are typically what I call longer term or traditional accounts. IRAs, 401ks, SEP IRAs, Roth IRAs, traditional IRAs, Coverdell educational, college accounts, 529 plans, all those remain long. There's nothing but bullish price action recently. Whether we get a pullback that we can game off today, and I think the odds are good. That's why I reversed covered the trading account shorts and went long. Closed the longs and reversed to short. I think there'll be a tradable pullback from on or around these levels, and if not, then I'll get back in at some point. But probably not until the pullback now. This is, I think, significant resistance, and that's why that's been a target for a while. So today is if you look at it this way, it is a breakout of this trading range right here. You had this high right here, this high, and yesterday we broke out today's follow through. And so let me be very clear. If you're not an active trader, then there's no reason to go short or close out your longs unless you think this is it. But again, this is a breakout, and I think this further increases the odds. I'm talking a breakout of that recent trading range. Just go back down to my 60-minute chart, and you can see it clearly there. We turn off all the lines, and these are those previous reaction highs right there, there, and there. And then this breakout, which is quite impulsive. So what I'm looking at here is you had there's the bottom of that trading range. That's what I was targeting before, and that's where we're at right now. I've been calling that as 305. Comes in right around 305, but remember, I always prefer to close long positions a little shy of the resistance level I'm targeting. If I'm targeting 305, I don't want to hold out for the last penny. Remember, in a 300-point security, every percentage point is 3 points on QQQ, and we're at 304 right now, so we're within a fraction of percent. So again, close enough for me. And my, in the trading account, I trade the NQs. That's Nasdaq 100 futures, and you can see the comparable level there. This is a 60-minute chart. That's that same trading range right there. It was very, very good support. And not only that, once we broke it, there was a waterfall sell-off. So that shows how significant it was. And this is the first back test of it. This right now, we're a hair above it. I call that a momentum-fueled overshoot. And these lines are not completely rigid, but when you have a lot of momentum going up there, and you can see we're starting to diverge right now. That was on the last chart I gave you. So we're overbought. Now look, overbought stays overbought and becomes more overbought during a breakout. I've covered that many times before. So you don't just short overbought solely for that. But it's usually, especially with the major tops, it's not the first overbought reading. It's the second one at a lower level that gives you the divergence. And so we'll see. And look, if they take it out, then there's still big resistance right up here around the top of that range. We had a false breakout right there, but for the most part, that's about 218. 12.816 to about 12.851. and certainly a level I think will be hit in the coming days to weeks here, months, maybe the coming weeks. Remember, we do have today's only Wednesday, so they got a little bulls have a little time to play. But then the Fed meeting next week, and you have the big FANG earnings coming up later this month. So at some point, you'll see a little profit taking, I believe. Right now, we're still in that what I've called the paradigm shift, where the masses, if I'm reading this correctly, and so far I seem to be reading the tea leaves pretty good, the masses are collectively realizing that the world is not coming to an end, the sky isn't falling, that despite all the huge surge in talks about in a recession, not only and pretty much baking it in the cake. Not only we're going to be in one, but how bad and how much more is left in this bear market. And now all of a sudden realizing that companies are reporting earnings and hey, and I said this back here that. Every time I've gone on vacation or to restaurants recently, and I talked to other people about it as well, everything's booked. Someone recently said they got back to the Caribbean. Everywhere they went was full. So the world's not falling. There was a lot of stimulus and money pumped into this market, and right now, like I said, I think people are realizing that that coupled with the fact that the Fed is, well, the Fed never baked that 1% in. The market kind of implied that they would, and now that 1% hike is those odds are greatly diminished. So, all right, I covered all that. That's the fundamental catalyst. This is a technical catalyst, and the way I work is I just rather lock in. I've had some tremendous gains in recent weeks here and months that I want to just hedge up. So I'll take a shot at a short in the trading account. Long-term accounts still very much long, but I did book some profits there, and I've even just before the video in a couple of those counts initiated some shorts, shorting the Qs via SQQQ or futures as a hedge to those positions. But it'll still be a net long position. It's called a partial hedge. One-to-one hedge would be if you have Apple, Amazon, $100,000 of tech stocks or the Qs, and then you short, QQQ. I don't do direct hedges. It's a wash to me. Just sell it and take it out. Why be, long 100 shares of QQQ or 10 contracts NQ and then short it at the same time? Your broker is the only one making money on that trade. So I'll do indirect hedges. And still have a lot of those stocks I told you I like, Facebook and Amazon and Shake Shack and you name it. Even Zoom on the pullback still looks good for our next targets. This is Zoom. We hit T1, effectively hit close enough to T2, but I'm not considering it a hit yet. We came very close there, and I still think these targets get hit. Pulled back to, remember, this was our breakout point, resistance. We broke out there. That was a buy signal, and we pulled back on perfect back test. So these are the kind of charts. I can't update each and every trade every day, but if you took this one or you missed it, and then you wanted to get on it when we were up 20 something percent here, 26, 28% at the highs, that's the exact place we back tested the breakout level, and very nice. Remember, resistance once broken becomes support. That's TA 101. And so that's what you want to do in a bull trend. When you're bullish, you buy pullbacks to support, just like you short rallies into resistance in a bear trend. All right, so let's go back to the markets and we'll wrap it up here. Keep this one quick. I've got some work to finish on the site. I've been on the phone with my hosting company for quite a while today, almost an hour, trying to just do some updates to the site. Having some issues getting charts out to you guys. I can screenshot them, save them, but the uploads are failing. I'm going to do multiple attempts. And it's just some updates, software updates we need to run. So the site could be offline for just a little bit today as one of those. I'm still waiting for a full backup of the database. Once that's complete, I'm going to run the update today. I want to get that done as soon as possible so I can fire off charts to you guys. That's why I'm doing a video now. All right, there it is. So NQ, it's been a nice run since that pivot at the lows. It's been, I'm trying to measure it here at NQ. Trying to see what that's 13%. And so again, yeah, do we go up more from here? I very, very much believe so. It's just how far and fast do we go up before these overbought conditions, divergences, and the fact that traders are going to recognize that it likely is a pretty significant resistance level, and so I just feel good, booking some profits here on those longs, and then recycle in on a pullback. I gave you some targets earlier today. If you zoom in on the 60-minute chart, you want to target some of these reaction levels. I'm going to add a line now. I know there's a lot of lines on this chart because I actively trade the Qs, so I leave these on here. Some of these older ones I can take off now, but there's a nice level. You have a reaction low right there, but I think this is probably, if we can get a decent pullback going, I'll come back in here at about 12,181, and that's really all I'm looking for right now. Nothing more than that, and it might even be less than that. You have this previous reaction high right there. I'm going to go down to a 10-minute chart and show you that. So here are your levels. Let me just highlight these for you. Let's use the circle tool. This line here, 1, 2, 3 reactions, 4, 5, 6, at 12,184.50 right there. And again, you'd want to cover, the buyers are going to be a lot of people that have missed this long rally, a lot of what I call non-believers, and they're starting to believe right now, and they're starting to get FOMO. It's itching. FOMO's a very powerful urge, fear of missing out, and so they're going to be buying a dip, and that'd be a heck of a fade. And so that's why, to me, it's all about risk reward. I'm going to stick with these shorts on the active trading account for now. See how far we go today. We're up almost 2%. Rarely do you get much more than 3-4% in a single day, so I'm going to give it a couple percentage points at least today. We'll see how it goes. I'll certainly give you an update by the end of the day, but the pullback from here, I'm trying to not move that line, but that's too late. I'm just going to get it out of the way. That pullback would be about almost 3, close to 3%, little shy. What does that say? 2.7% from where we're at right now, and that should be about it. Like I said, I think we've done the momentum overshoot on the NQs, but QQQ is right there, solid. In fact, let's see. Let's just go over here again. Here's my turn the lines back on, 305, and we're at that again, close enough. So that's it. I don't want to beat a dead horse. QQQ is my go-to trading proxy, is the most significant index in my opinion, but we'll look at them all real quick since you might be trading that, and also what does it mean for the market. So here's SPY. Now glass half full, meaning optimist scenario. Yeah, breakout of this recent trading range right here. There's your breakout, but the glass half empty says, okay, got a little stretched right now, getting a little overbought. And look at this big old gap right there. We're just at the bottom of the gap. I'm going to turn the lines back on. You'll see I have that gap there. I'm going to move that line down a little to come closer on the gap. That's it. Right on that. See that gap here from June 10th? That's it. So we're testing the bottom of a big, very significant gap there. Oh yeah, and that's what I give you on SPY as well. I'm sorry, on QQQ. That is SPY right there. QQQ, you have the gap. No, we took it out. We're at above the bottom of that gap. But again, this is the important, much more significant level. So you have gap resistance on SPY and even more significant price resistance on QQQ there. And then IWM, small caps will do their thing. They've been playing a game of catch up lately. Had been overweighting those, but also taking some profits there on the small caps in the swing accounts today, and plan to recycle back into all the shares and probably then some on the next pullback. But here's pretty big resistance coming up here, about 183 on IWM. And again, nothing but bullish price action right there with the breakout. I highlighted the downtrend line breakout the other day. So, we could carry a little higher certainly before the first pullback. And so far they've been buying up the pullbacks voraciously, especially that dip in Apple the other day. And again, that's just, like I said, every day, or just about every day over the last few weeks, I've seen check mark after check mark for the bullish case, meaning that we're probably going to carry considerably higher here in the coming coming weeks to even months there. And so there's a near term, there's a downtrend line for IWM right there. There's your 200-day moving averages. And remember on QQQ, we still have way to go. Although this was my initial swing target early on, I said my max targets, which are still my max targets, would be somewhere around here. The primary downtrend line on QQQ, which is still from where we're at today. Now, you're not going to hit it in a day, keep that in mind, but from where we're at today, that downtrend line is about 10% higher. Then you have the just below it the 200-day exponential, and just above it the 200-day simple, and I'm targeting any of those three. We'll see how it comes in. But remember, you're not going to go straight up there. What I think is going to happen is something like this. We'll zigzag and work our way up there, and then eventually get there. So it might be maybe another 8% or so upside from where we're at. And we'll assess it when the time comes. As of now, if you had to put a gun to my head and said, well, Randy, if we get there, you're going to stay long or go short? As of now, I would tell you I'd close all longs, go short. But that's the beauty of it. Nobody's putting a gun to my head. I always say the charts are dynamic, and so is my analysis. So I will assess things if and when I'm right and we get there. Do I close all longs and reverse to short? And that'll all depend on how the charts look, what's going on with the fundamentals. You know me, 90% of what I talk about on this site, or maybe 80, is technical analysis charting, but I also have a strong background fundamental analysis, and most certainly do factor that into my trading, especially with swing and trend trading. So that's it. Really not much more to talk about. Looking for, I think it's a very objective, high probability short entry now. Great time to book some profits if you made them in the last couple weeks, couple months here. Actually, it's been since that low. What are we talking now? That was 16. It's been 1.1 months, so just over a month since that low there on the 16th of June. And like I said, more to come, but getting a little frothy here. But maybe get a pullback to that 296-ish area right there. All right, I'll wrap it up here, get out to you guys. I'll do something at the end of the day. If we don't pull back, I'll let you know my thoughts. If we do pull back, and I see any other levels, but I think, I was pretty clear on, what potential pullback targets are. You can see that there's 296.50. It's just really looking good if we can get a pullback to that level. And like I said, if we do, it's going to be to the tune of about 3%, almost 3%. 2.5%, about 2.5%. All right, we'll wrap it up here, and then I will work up a video as soon as I get a chance. I've got to finish the updating of the site, and then I'll get updates out to you guys on the all the other trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.